Good morning, folks. Welcome to today's technical video. I'm going to do a quick rundown of stocks and cryptos, currencies, and a couple of other things like oil and gas, and maybe some of the metals. I'm keeping this quite short. I'm launching my natural gas course next week, so check out the links below if you're interested in that, and make sure you sign up to the early bird list and all that sort of thing. The first thing I want to do is look at the NASDAQ, and of course we've had this massive correction down towards these lows here. Look at where we got, well below the 200 period moving average and below the channel bottom, and we're bouncing back up now. We did manage to get back inside the channel, but failed at the 200 period moving average with a tweezer top and a big bearish engulfing candle. And we're now below the channel bottom again, and also below the 20 period moving average, which we did close above for 1 day or so. So let's zoom out and have a look at the bigger picture. There's the big correction we're talking about. The last time this happened was in July last year, of a similar size and similar nature, in fact a very similar shape. Now, last time we had a V-shaped recovery. Will we get that this time? Often we do after these sharp corrections, literally just a V-shaped recovery. So can we get that now at this low level, or do we have to faff around a little bit longer and not be quite as dramatic on the recovery, if at all? Let's have a look at where we retraced to and what the price action has been. So we have the bounce on that low there, moving up to underneath the 200 period moving average, as we had hoped and expected. We were long, we got out, we've taken some more long positions, more or less where we are right now, a little bit higher. But the important thing is where we've pulled back into, and we've had exactly a 50% retracement from that previous low up to the 200 period moving average swing high. You can see it over there. Perhaps in pink it's a bit difficult, but precisely 50% retracement and to the previous swing highs over here. But more interesting, we actually closed this little gap, and I'm hovering over it now. I'm sure you can see it. After that bearish pullback from the 200 SMA back down to the channel bottom, we didn't quite close that gap. We managed to do that yesterday, and today we're just moving fractionally lower. Currently, this is a live chart making a slightly lower low. Let's zoom into the 4-hour chart here on the NASDAQ at my Black Bull broker, and there you can see that level really clearly. In fact, we're resting precisely on top of that 50% retracement. Notice there's a market structure break there as well. And also we've completely filled that gap, which I highlighted on the previous chart. So what do I think we could do today? Let's go back to the day chart. I think we have to look at this like we may get a bounce on stocks today. So instead of a free fall Friday, perhaps we'll get a TTM Friday, a to the moon Friday, instead of a triple F, a free fall Friday. Let's hope for that. Of course, the stock market's always optimistic and bullish in nature, and considering the normal V-shaped type of recovery, and also a lot of uncertainty and fear in the market. So all sorts of things. Of course, we're very oversold at these levels on all these instruments. So we'll wait to see what happens. And I think a couple of the keys to this could be stock names like Tesla, Nvidia, perhaps even MSTR and Coinbase that we've got down here. I have a long position on Tesla right from the bottom. Didn't like the sharp rejection from the 200 there as well. But if we can manage to, actually not a particularly bearish candle this yesterday. It's a hammer candle, but it could be a bullish candle actually, just the way it's situated around the 200 and the shape of it on top of that channel line. And I think we've got a chance of a bounce on Tesla. Maybe MSTR again today, looking pretty strong. And Coinbase, if Bitcoin gets a wiggle on, Coinbase could pick up. And Google looking particularly weak as well. So we've got a few shares on these names down at the bottom here, not MSTR just yet. And I'm also long NASDAQ. We've just taken our short hedge off here on the S&P. We got short right at the top on the S&P, retaining that long position. We've taken that short position now off at the 20 period moving average and this 38% retracement level. You'll notice that the S&P is pretty similar to the NASDAQ in that we had that tiny little gap down there. We've now filled it. Well, filled it yesterday, and also just hovering on top of that. Well, it's a 38% retracement level in this case, hovering on top of there and hoping for a bounce after a potential tiny sort of reversal doji yesterday. We'll see how this day plays out. So I think a lot of it's going to be down to names like, as I said, Tesla, MSTR, Coinbase, Google, Nvidia, and so on. And if those can all pick up a bit, maybe a bit of good news, and we could be off and away. Now, let's have a look at currencies. Well, we still have a short position on dollar yen, short position on euro yen, and pretty much sideways for the last 2 weeks on both of these currencies. So I don't know. But I do think that the dollar probably has corrected enough now up to the 20 period and even the 200 period moving average right here. This is the dollar index on the day chart, and a nice correction zone. I'm still expecting the dollar index to fall back into the range, towards the bottom of the range, which is at around about 100. So we've been trading broadly in this range for a number of years now, and I expect we'll still stay in this range, potentially with a breakdown below. I'm not counting on that or expecting it, but it's a potential opportunity for a short if that happens. But generally, I don't see any impetus for the dollar one way or the other right now. When you look at interest rates and GDP and economies around the world and what's going on, tariffs, of course. And then, of course, on the last round of tariffs with Donald Trump, we saw the dollar index falling down back to the bottom of the range. And I anticipate, not predicting, that we'll just do the same thing here. So I'm looking for a move back down to around about 100. We're at 104.50 now. And so we could see a 500 pip rally in the euro and the pound and in the yen, which will bring the dollar yen down. And potentially, if the dollar yen moves down, we should see a sharp drop in euro yen. This remains my favorite chart on the euro yen, just for those who like to trade this currency. The classic setup, technical setup. I'm not going to explain all the details of it right now. I've done it in previous videos, but that's our target down there at 144. Preposterous, you might say. But that's my target for euro yen, 144. Right, I'm not going to talk about crypto today. We have long positions on Ethereum, Bitcoin, and XRP. You can see our positions roughly. They vary in size, and I'll be updating on these as and when they sort of get going one way or the other, something dramatic. I'm quite optimistic about Bitcoin, just to finish off this tiny little segment, and I think we could have a sort of an S-shape recovery here. Let me just draw that in for you. So it's something like this. And it should be in green. Imagine that's green, but I'm not going to be bothering to change that right now. So a sort of an S shape, a sort of a rally, consolidation, and then an epsilon formation to follow that. I think that's shaping up quite well right now. There is one danger zone, though, below us that we have to be very careful of. I'm going to switch to the futures chart here on the CME and look at what's just beneath us over there. Look very closely. You can look at the numbers, 84,400 up to about 85,200. There's a tiny little CME gap there. We have not tested it. Bitcoin normally likes to test these CME gaps, either the top or the bottom. Normally Bitcoin closes them. So we might have to suffer a move down to about 84,300, 200, 400, something like that. If we do get a CME gap touch and then dramatic bounce, I'll be looking to add more to my Bitcoin long positions. And that would be a sure sign, or at least a positive sign, that we're moving higher. Now, gold and silver. Before I talk about gold, I want to talk about my silver position. We're long from over there. Pretty simple. 33.10, I think it is, or 11. So a very healthy profit on that trade. And at the same time, we've been faffing around with gold, and we actually took a short position yesterday at that tweezer top, potential tweezer top, hanging man candle pattern. That has failed, and we've moved up to the 3080 level, and we've got blue sky above us. So I don't know where the highs on this. It could be 3080. I like the 80s and the 20s, so I always have a look at those numbers. We haven't reverse set this 80 number just yet. Let's go back to the day chart for perspective. So it's not far below us, and there's the 80 level. But above us, I don't really know. We could get to 3,100, 200, 300, 400, and who knows where we'll go with this. So I have not closed my short position on this gold trade yet, because we have a long position on silver, and I'm using this as a hedge against the gold short, or vice versa. Actually, we were in the long silver position first, so the short gold position is a hedge against the silver position. The trick to the gold position is that's very overextended, overbought, and all that sort of thing. And of course, we're looking for shorts at these high levels. I did an essay on gold earlier in the week. I don't know if you got that, but basically, we're looking for gold to consolidate at very high levels, perhaps drop down 38 or 50% of this last rally, and then consolidate there for 3 to 6 months. During that period, we'll be range trading, selling the tops, buying the bottoms, selling the tops, buying the bottoms, until we make a very long-term bull flag or channel, descending triangle, whatever it might be, consolidation, and then looking for us to buy for the next move up. But right now at these high levels, it's not a good investment to be buying gold. It's incredibly overbought. And I'm waiting for that pullback to get much more bullish on gold. And that pullback could be quite long and quite deep. So we're looking to get that move down initially, and then start trading that range, as I said. And just to reiterate, the reason I'm holding on to the short gold position and not stopping it out or hedging it right now, I might do in the future, is because we have a long silver position, and the gold position is the hedge against the long silver position. Right, going across to natural gas. But before we start, we took a short position on WTI oil a couple of days ago, right at $70. And we now have 2 tranches on there. Looking for this to move down. Quick zoom into the chart just to show you. Just at the top of the channel, and the confluence of the 2 moving averages. My target for WTI is back down to Moab, and then a break below there, heading down towards that channel bottom that you can see on your chart right now. Natural gas, we're messing around at this level. I got some comments on Twitter, on X, about my indecision at this level, and my response was, if you're completely certain about the direction of natural gas right now or at any other time, I wish I had your foresight or your predictive abilities or your godlike qualities. I'm not able to predict natural gas, and so when it faffs around and flops about like this, I have to be nimble, willing to hedge, willing to exit, willing to change direction, willing to look at this market from both sides and not get fixed on a particular direction. I know a lot of bulls are adamant that this market's going up, and a lot of bears are adamant this is going down. Some say $5, $6, $7. Some say $3, $3.50, $2. Myself, I just don't know. So right now we're completely hedged on natural gas. I went long there, and then we hedged there. So we took a long position based on this double bottom spike low, tweezer bottom. We held for a while, rallied up pretty sharply, formed a 1 up, 1 down reversal candle pattern, which is also bullish. But then 3 candles later, we just collapsed back down to the key 375 level, and that's a very, very important level on these charts, as I've mentioned many times before. And if we hold that level, we might expect a bit of a rally. Now we can draw some trend lines and things in here. Doesn't really matter because I probably won't be taking any positions until Monday. But there's a trend line that we're holding beneath. And that trend line also coincides with the 50 period and the 200 period moving averages and this recent swing high that we created in the last number of hours. So we're now stuck in betwixt and between. We're trapped underneath the trend line, the 200 and the 50 period moving average on the 4 hour. And below us, we've got the crucial and key 375 level. Let's go to the day chart and have a look at this. You can see that big spike low looks quite bullish when you look at it from a daily perspective. But remember, we're at $3.75 and above about $3.50, $3.75 towards $2. Most of the time we should be looking for shorts on natural gas, and so we're in this weird sort of zone right now. Look how we held the 50-day moving average. Look how we spiked down below that level, cleaned out all those long positions, including mine. Well, I didn't get cleaned out, but I got hedged at that moment. We can also take this chance to redraw this trend line more accurately on the daily chart. And that's always a good idea to go back to your daily chart when you draw longer term trend lines, because the daily chart is definitely more accurate. But look how this looks. A big spike low, breaking down below support, clearing out, liquidity grab, whatever you want to call it. Spike low, I call it. And then butting up against that trend line right now. All looks quite bullish. But notice the spikes on the top too. All sorts of spiky wicks above us, spiky wicks below us. So right now, and we've got the weekend coming up, and the rollover has just occurred. So it's all up for grabs, both directions, and I'm probably not going to be adjusting my hedge until Monday or Sunday night. So I hope that was useful for your natural gas. If in doubt, hedge or get out, take a stop loss and wait and pause, wait for the next move. You don't have to be in the market all the time with natural gas. And you don't have to be sure of or pick a particular direction on any particular day of the week. I just want to finish off with uranium. This is the URA ETF, and looking a bit weak again today. You can see our long positions, one from there and one from there. And I remain bullish on uranium in the overall case, and I want to show you what the futures look like very briefly in this next few seconds. I'm going to start with the monthly chart. We pulled back to the 50% retracement. Not quite there. We could dip a little bit lower, but there's the 50-month moving average. If we go to the week chart, let's zoom in, so to speak. Once again, there's my blob, there's the 200-week moving average and the same 50% retracement level, and that's where we are today. So that's on the UX1 uranium futures at the COMEX, and I want to show you what this weekly chart looks like. Full stop candle, followed by a bullish engulfing candle. But there's still room for this to move down just a wee bit further into that zone down there, just a fraction lower. I'll continue to build on my long position on URA, and also the other one we trade is UEC. Go and check that ticker out yourself. Hope you enjoyed that, folks. I'll see you in the next video next week, maybe Sunday night for the Nat Gas traders. And if you're interested in my Nat Gas course launching next week, check out the links below, put your name on the early bird list, and I'll see you inside. Take care.
Wake up early every day, watching charts in a caffeinated haze. Clicking keys and placing trades, got that natural gas fever burning red. Highs and lows, they twist and spin, market whispers make me grin, analyzing every trend, hoping my predictions win. Natural gas.